All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for March 3rd, 2025. We are recording this at our new usual time of 7 p.m. Eastern Time, and this is episode number 468. Today, I have arranged for Michael Filighera and Sunny Harris to join us again, and the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, let's get right into it, guys. We've had a very big day today. The zero days to expiration crowd, if they did a couple of puts in the morning, certainly had a pretty good day.
Yeah.
But let's see what's going on. What chart are we going to use as far as is Sunny? You want to put yours up to
This is
start out with?
I'd be happy to do that.
Let's see if any of your Sunny bands got stretched. I would imagine there's been a little stretching lately on the
Can
Sunny
I
band.
start screen share without the other
yeah.
participant?
You should be able to share now. I just something.
All right, there we
It's
go.
loading now. Okay.
That is
Yeah, I see
Sunny
it.
Bands, and it is the E-mini. And I think we've rolled over into an impending crash down to at least 55.27. So I think we've got some more down to go. It may not go down immediately. It may go up first, but I think we've got a down move coming.
Mm-hmm.
Do you
Yeah,
think,
it looks
Michael?
that way. It looks that way from the standpoint of have you guys ever heard of something called implied correlation?
No.
It's a sister product to the VIX. And the lady from the CBOE was on the TV, and she said basically it's around 20, and when the market really gets going, it goes to 40, and if there's a crisis, it goes to 90.
Wow.
So she thought, and she works at the option exchange, and she
CBOE?
and she thinks it's going to go to 40, and she thinks that there's significant risk in the market still.
Yeah.
Was that Catherine Clay, Jim?
No, it's a Asian lady.
Oh, okay.
I forget her name, but she's a sharp girl.
I think
Anyway, I just wanted to know.
I,
I mean, I'm believe me, I'm going to look at that. I looked it up on the Google, and I'm going to become more familiar because I think it has to do with correlation index means everything drops.
Yeah.
I mean,
yeah.
that's what it means.
I
In
just
other
put
words,
it.
the VIX is mostly going to be with the S&P 500 stocks or whatever, the index. This
Hmm.
is going to be more of a widespread, and that's why when you get a big drop like August of last year, when we go
Hmm.
from 5,800 to 5,200 or 5,100, the index will jump up towards 20. But if you get a more significant drop, then it can go to 40. And she thinks this might be a time frame where that could happen. There's a lot of unknowns out there. The consumer's already pulling back. The GDP for the first quarter has just been reduced to minus 2.8%
Oops.
because the trade deficit is exploding because everyone is front running these tariffs.
Hmm.
So there's a lot behind the curtain right now, and yeah, we'll have to see how it goes. Um, is there, you want to go over a couple of other markets, Sunny, while you're there? Like the
You
price of
bet.
oil's kind of hanging on for dear life, CLH or whatever you use for crude.
Yeah. The first thing I want to point out, though, is this attractor I've drawn
Yeah.
at 55.51 on the ES. So I think that's where we're going. So let's do crude. Oh, what a mess. That's just moving down below the DMA. It's at the tractor that I drew ever so long ago.
Right.
And it looks like it wants to go down farther to me.
Yeah. OPEC announced that they're going to put their expanded some supply in. So I don't know. That could be the nail that breaks 65 and turns this thing into a $50 crude market.
Yeah, I've got 61 on my tractor.
Yeah. See, that's really the cement foundation is between 60 and 65. To
Mhm.
really get the thing to really get the thing to accelerate to the downside, you got to break that six handle.
Yeah, I think we're going to break it.
Yeah, well, if they're going to be increasing production, and we're going to slow down because is afraid to do anything because Lord knows what the news is tomorrow.
Isn't that the truth?
Yeah, I mean, come on, I ever heard something 25% tariff the next day. We're not going to do it. 25% tariff. We're going to. And these are pretty big things to do, aren't they?
Oh,
Yep,
gosh.
they are.
It'd be like
Well,
calling the trade desk, buy 1,000 options. No, I'm not going to do it. Next day, buy 2,000 options. No, I'm not going to do it.
Mm-hmm.
The trade desk would start hanging up on you.
Trump speaks and the market listens.
Yeah, that's what I'm saying. Okay, here's the thing is he signed the document for China to get their tariffs. He has not signed the document for Mexico and Canada.
Yeah.
So to get the thing to rally, he might do something like, well, they've been doing good on fentanyl, even though Canada has zero fentanyl coming in. And we're going to only do 15%, and hopefully that will give them the relief rally. Maybe that's going to because there's a reason why he hasn't signed off on it, and it is 24 hours away, 24 hours away from happening. You know what I mean?
Right.
Yep.
It's like I'm going to Europe, but I haven't bought my ticket yet. You know what
I mean? It's part
Well,
of
you might as well
the
jump on Air Force One.
Yeah.
boy.
All right, and what about the price of gold? That went down and tested 28.50, held at 28.50, and where's your bands talking about gold?
Yeah, it popped back up. It was up something like 53 points when I looked at it before the market reopened.
Mm-hmm.
It was, yes.
So it's doing well. I'm buying more.
The question really was, is there a possibility of a more deeper reversion to the mean towards 2,700? And that's really the question.
Yeah, I don't think so.
No, so you think the 28.50 was about all she wrote on that?
That's about all there is. I think we're heading for 3,000.
Notice it on your blue line. It touched it, held it, and went.
Yeah.
Yeah. No, I had a moving average there myself, so I 100% agree. Yeah. And it would be nice if it could start trading above 29.02, which is where it is right now. And then and if it gets above 29.21, then we're talking probably new highs, huh?
I think we're talking 3,000 still. I really do. I told my broker the last time I went in and bought a bunch of coins, I said, we're going to 3,000 now. I buy every low.
Yeah. Well, like I say, if it pulls back to support, that's what you're supposed to do. So what about the bond market? Can you put the bonds up there? Because they're testing the lower end of things. And if there is going to be a significant slowdown and consumers are really going to pull back rather than pause, and if this yields drop under 375 or something, there could be a big recession on our hands here, no doubt about it.
I think we've got it with no question.
Yeah, something like 3.5% will not get us out of it, though, because once this big machine turns over, I don't know that just 1% off your interest rate is going to change much.
Right there's the next resistance. It's just a tiny bit above where we currently are. I think we've got resistance and then a pullback.
Yeah, because that's the yield 410 that has some support on the yield. So if the yield's going to not go lower than 410, then the price is not going to go above that number you've got.
Yeah, I think interest rates are about to go up.
Yeah, like I say, if they don't, that'd be very, very bad for the stock market because that would be indicating a growth scare of which, people don't need when everything is valued at 22 to 1 P ratio, So we had the bonds, we had the stock, we had the gold, and what about the U.S. dollar?
Oh, let's see. It's dollar. Wait a minute. DXY, right?
Yeah.
You know that I've read a lot of stuff about China keeping the yuan really, really low so the dollar will have to stay high. And then I read recently about Trump's new plan to get the dollar lower and lower so that we can compete more. And I would not be surprised to see it go lower.
Yeah, it's got a nice uptrend on your 5-year and 20-year, meaning the weekly and the monthly. On the yearly, it's still got a lot of support around 106. Are you showing support around 106 neighborhood?
Let's see what the monthly looks like.
Well, the monthly is a little lower than that, but
104 on the monthly.
Yeah, 104, yeah. But that's still in positive territory, right?
On the week, yes, it is.
Let's go to the weekly.
There's the weekly.
It's really right on your purple, huh?
We're right on the DMA. Right on.
And what's that? Is that around 106, 105, 106?
It's at, slow down here, 106 something, yeah.
Yeah. And that's where it's been trading off of. So we'll have to see. It was down today 1%, So there was some selling on that.
Yeah, I think
Yeah.
there's going to be some more selling.
Yeah. I think, listen, on the 1 year, definitely I got stuff pointing down, so I would not argue with that at all.
Mm.
Um, well, let's switch gears over to Michael and let him do some counting for us, and maybe he can give us an idea on how deep the valley could be, or is there been a third wave or a fifth wave that has culminated here today, and that's all you're going to get. So, do you have anything to give us an idea on that?
I thought I'm sharing my screen and it's not coming across, is it?
I
I
got
see
it.
that. Yeah, we got it.
Yeah, I
Yeah.
Oh,
see it.
good. Okay, I just have to move mine back over to the other window and let it make sense. Did it move with me? Yeah, it did. I mean,
Yeah, we're seeing the NQ chart.
okay. First thing that I would talk about is since we use the S&P, let's talk S&P. And I'm going to go to the SPX. I'm going to go to, oops, thought I was going to go to the cash. I like to use the cash when
Yeah,
I'm
sure.
doing this. And
Yeah.
what actually happened over the weekend. So I was taking a look at Friday's trade, which was incredible buy pressure, incredible volume pressure, and thinking that, okay, that's the announcement that the low that we created on Friday morning was it. And obviously that was not the case. So digging a little bit deeper, what I did find is that what was actually happening was there was like $3 billion being pumped into the market, but it was coming in via calls. They were buying calls. And this was like after they'd already situated all of their points that they wanted to make and monetized puts and then monetized calls, all set for the expiration. And then they came back in 45 minutes before the close and they just started pumping and buying and pumping and buying. And in the last 15 minutes, the S&P went up over $50, which is a big move in 15 minutes for the S&P because
Yep.
it takes a lot to push. So initially, I thought that we likely had finished a fourth wave, and I had put this over there. And then I took a look at it over the weekend and I thought, you know what? I don't think so. So I think actually what we've done is this three I had placed there. And I was waffling whether I should switch it back to there. And then I came through and I realized that this is actually a diagonal move, this minor five going up this way. And so, which would suggest that the minute fifth wave, all of the waves inside here would be threes. So there's ABC1, ABC2, ABC3, ABC4, ABC5. So I put the finish of intermediate wave 3 at the February 19th high in the SPX.
That's interesting.
The ES, the futures market, did not make a new high, but I flipped that over today based on the move that we got in the markets starting after the White House announces, like, oh yeah, by the way, I'm going to put another 20% on China. So whatever that is going to amount to, I don't know. I think 35%. And that he does intend to begin tomorrow, Canada and Mexico. That's what I heard.
Well, that's what he said. He just hadn't signed off on it yet.
Well,
Right.
so again, then it goes back to what you mentioned before. It's like, yeah, well, it gives him enough time to change his mind.
Right.
I think that the damage has been done. So realizing that what went into this, and when I was really looking at the individuals, like particularly with the Dow, what the Dow finished up on Friday, what, about 680 points, something like that. And I think they will live to regret including NVIDIA in the Dow. Because that volatility, I think, is going to crush a lot of other things. So NVIDIA had like a $8 move on Friday. Today was a $9 move in the opposite direction. If we really take a look at, just do it for me, not. Let me get this down right. So I want to really show, because this is kind of important, what we had happen today. Look at that bearish engulfing. So we had a bullish engulfing followed by a massive bearish engulfing.
Mm-hmm.
So it didn't just engulf Friday, it engulfed we include some previous bearish bars. So that was so close. And now there's a very important level at 5,800, which is support. But why it's support, it's also the put wall. So what that suggests is that what's sitting there are short puts. So who's ever got the position, it's short puts that are sitting there. And it's massive. It's not small, it's massive. And whether they were able to actually get that out of the way now, and normally what can happen with a lot of the SPX traders and the firms is they'll move it down, they'll bop it down 100 points. So it's either and I didn't know because I've not really gone and looked at totals yet in the options, but they flip it down 100 points. But it starts to get dangerous by doing that because we had coming off of all this, right? We were up above 6,100. We had support at 61. Then we had support strong at 6,000. Then we had support a little bit stronger at 59. 59 got ditched on Friday.
Yeah.
But then I thought they were going to go try to attack 58. They got close, then recovered and did that massive buy. So I thought they kept that safe. The SPX got down to 58.11 today, or 58.12. And I think it's up next. And if it goes, and they haven't moved it down, the next large support level in the SPX as it stands is 5,000.
Wow.
So, yeah, exactly. Wow. So when we have to consider, I'm looking at this as like we're inside now this intermediate fourth. So if I put that as an intermediate, what the suggestion is like if you follow Elliott and you study Elliott, Elliott tells us and wrote about it extensively that a fourth wave will find its terminus, its endpoint, within the fourth wave of one lesser degree, and most often at the bottom of that fourth wave of one lesser degree. Well, this is intermediate, one lesser degree is minor, and there's your minor 4. So that's 51.26. That's just back to the August 2024 lows. I do not think it's the end of the world. I think it's going to shake the you-know-what out of the market, but it's not the end of the world.
Yeah,
If we were to drop all the way to 5,000, I would get a little bit nervous.
Yeah, I think we're in for an interesting down move.
Interesting, exactly. I agree with you because of I'm doing it on a purely technical basis, but if we have to start adding in the Washington factor, we have to add in the Ukrainian factor, we have to add in all these other things, which could have an effect on our markets, depending on what actually happens with all of this. I think that what people are really missing, either that or they're just not willing to admit it, a trade war with anybody is not healthy. It's not good for the economy. It's not good for the markets. To have this misbelief that, oh, yeah, we'll just brush it off is nonsense. So I wish that the media would stop putting the emphasis on, well, the numbers are showing this and this is that and et cetera, when it's really, and I'm going to say it again, as the options go, so goes the market. Because of the tremendous increase that we've had in options trading, and that's just not, the increase is including zero DTEs and how all the ETFs now have zero DTEs, and we have weekly expirations, we've got the quarterly expirations, we got the monthly expirations, we have daily expirations. And so it just allows for a lot more participation. The exchanges love it because they get paid on every single transaction, right? So we get all that going, and we're trying to figure out, well, is it bullish or bearish? It's like, well, I think that that's kind of gone by the wayside. I think it's really just being controlled by where these positions are lining up and what happens if they get broken.
And
We saw
Warren
it in both
Buffett,
directions on
Warren
Friday.
Buffett thinks that the declarations of tariffs, the way we've got them, is a declaration of war. So,
Who was saying that?
what?
Who was saying that?
Warren Buffett.
Oh, well,
So
you know,
I don't ever think Warren Buffett's wrong.
I don't disagree. I would say that, hey, he's a pretty smart guy and he's been around for a long time. And he actually started a lot of the original drops
Mm-hmm.
because he was saying, I'm getting out of my positions. I don't know about you. And then here comes the
Mm-hmm.
next one. Here comes the next one. Here comes the next one. And now I think it can begin to accelerate. But on an Elliott wave basis, it makes total sense. I've got to work an ABC down, and there's my target, 51.19. That's
Yeah.
my target that I'm looking for. Well, I'm thinking this is not even the minor A wave. It could be, but then I'd have to mark that as the a minor B wave, and we're now in for one hell of a doozy called a C wave, and it would just come flying. I mean, this thing will just slide.
Yeah, I don't
But
think you're wrong.
yeah,
You think it could go back towards and use the highs of 2021 at 4,800 as a support? Maybe overshoot your 5,100 a little bit?
ooh, well,
Because
wow.
that would be kind of a logical place to revisit, you know?
I mean, like 46.
No, 4,800 where the thing peaked out on, I guess it was January or December, well, February 22 or no, January 22. Yeah, January 22.
Oh, way back there.
Yeah,
Wow,
in other words, that was the high. And you know how prices come back and sometimes they go all the way back to the former highs because that is obviously possibly a support area. And that
if
would be
it,
that would be a pretty logical place to come up with a number. You know what I mean?
yeah, I do. And if it were to come down that far on an Elliott basis, I could no longer consider it an intermediate fourth wave. And I've shown you guys before, and let me just go out one more time, all the way to my monthly maximum. And you see how we got 1, 2, 1, 2, and I talked about this last time? Well, all we're doing is 3, 4, 5s. That's what we're doing. So now we're getting back up, and we just finished an intermediate 3, intermediate 4, do an intermediate 5 that completes minor 5. So then we come and then cycle wave 3. Now, what's to say that I'm not off by a cycle, not off by a degree? So if I have to start bumping this up in degree, then yeah, Jim, we could get to 4,100.
4,800.
We can, if we 4,800 we can get to on an intermediate degree.
Right.
I'm not necessarily looking for it, but
Right.
we could for sure.
Yeah.
Anything greater than that, you got to bump the degree up. And what it really telling me that the severity of the drop, of course, increases that much as well, right? You're going up a bigger degree. So instead of a 30% drop, you get a 40% drop.
And the two factors would probably be the jobless rate would jump up, maybe because of all this technology. Everybody starts getting fired. Plus, there's a vibe out there that Doge is creating that if you run a company, you should be firing people. You know what I mean? And
Yeah.
the second thing would obviously be if people start getting fired and their stocks go down, you know, they're not going to be buying homes at 1.7 million in Carlsbad anymore.
Oh,
They're not,
and I have to tell you, there's a
You know what I'm
whole
trying to say?
big,
And it wouldn't take much to take 10 or 20% off these prices on real estate because they're obviously ridiculously priced anyway.
they're
one,
not 1.7 in Carlsbad anymore. They are 300.
Well, you understand what I'm saying. They're back. You've seen prices back off, right?
Oh, no,
Oh, they
no.
aren't backing off.
In
not that
some
I
areas
see.
they are, but in a lot of areas they're not.
I thought some areas were starting to see some weakness. I mean,
A little
the home
tiny bit.
sales are down 10%.
Right. But
You know, so
California,
that can't be raising prices when the sales are dropping 10%.
no, but luxury. I'm going to go to the upper levels.
I
The
got you.
the medium to the lower, yeah, they're fluctuating a little bit here and there. I
Well,
can't
don't
speak for
forget
Southern.
the people that are in the $500,000, $600,000 house. If these go back into the high fives or into the low fives from 6 or 7, that's going to be a pretty shocking thing to people.
Mine's gone
Agree.
up again.
Yeah, I do agree with you on that.
Is
And is it
anybody
possible?
buying?
Yes. When we look at something like everything corrects.
Yeah.
Well, that's housing is
Well, like I
money
say, yeah,
and
it's four
interest
percent
rates
on
and
it's 4% unemployment now. I didn't say it's happening now. It's 4% unemployment, and people haven't even gotten their statement that shows a big ding on it yet. And we haven't seen so we haven't seen what would have to happen for it to occur.
It
I
will
I
happen. It
I
will
don't
happen, Jim.
I don't disagree with you. I
Yeah.
think that the correction in terms of employment, we haven't even seen a fraction. what happens when AI really becomes fully instituted? Like,
It's intended to cut jobs.
of course it's intended. Exactly correct. It's intended to cut jobs. Well, what do those people do? All the people that
They
work
get
on
on
help desk.
unemployment and the rate goes to 5 or 6% maybe.
Amen.
Yeah, it's
It could be,
just the fact that we're dropping all the federal employees everywhere. I mean, that's going to take a hit.
No, and like that whole acceptability of firing people is becoming very prevalent. And so if you had a couple of people you didn't need and you were feeling bad about firing them, if the norm is to fire people you don't really need that well, then it's not going to be weird to say you're fired, you're fired, you're fired, you know?
that's true. That's
I
true.
And
think
and
I've
and
heard that before.
GDP is supposed to contract, so that would mean if business is contracting, you go, maybe your restaurant doesn't need as many employees, maybe your construction company doesn't need as many because obviously Lennar and all those stocks are tanking,
Right.
and home sales are tanking,
We
and
don't
maybe
need as many doctors. We don't need as many air traffic
yeah,
control.
yeah. So, like I say, this thing is pretty priced up. The whole world is pretty priced up.
Amen.
A couple of pins in the balloon, and it could change. Obviously, you can see how fast it can change with the volatility we're seeing in stocks sometimes.
Right. Now, the other thing I think to remember is that we're not just in a, it's a very much wider correction. So it's affecting more areas of our economy besides the stock market and the bond market and other factors which we review here. I mean, we don't really take into all of the real estate, and you're correct. That is going to be a factor. And what happens if we turn into something like we saw in 2008, 2009, but under a different scenario, but the same thing where people start walking away from these mortgages, which, by the way, Jim, you and I talked about probably 6 months ago, but it was commercial real estate that we were talking about. And we were talking about, I was bringing to the forefront of what's
Right.
happening here in San Francisco, that huge corporations that own a lot of these hotels are handing it back to the lender. Not
Yeah.
just going like, go ahead and foreclose. They're saying, no, you don't need to do that. Here, you can have the loan back. We can't pay it. We're not going to. And
Right.
they walk away from it. And I'm not just talking one or two big hotels. I'm talking like the big Hilton, the Park City. All of our big hotels are in trouble in San Francisco. Downtown is in trouble. And so our government that's in place, they say they want to do something, but they don't have any idea what to do. So they come up with these stupid ideas on how the city can raise revenue. By putting silly taxes on its people. It's like, well, you're all going to move.
What about the office space? I mean,
Office space, believe it or not, is inching, and I mean inching, like a quarter of an inch, coming back a little bit. But you know who's taking it? AI.
mm,
AI firms are coming in and taking 800,000 or more square feet of office space in some of our buildings, which is great. So the people I think that are getting laid off and they're going to lose their jobs, I'm now seeing ads where it's like, don't worry about this, don't worry about that. Quit your job and spend 2 months and learn AI. And I'm like, well, at least they're speaking some truth to people that are still of age where they need to work. Then that would be the thing to do because your job is going to be replaced by AI. You might as well go in if you can do it and work to create other things that are going to be artificial intelligence because it is going to happen. And this is similar to the digitalization of currency. It is well underway. So what effect is that going to have? What effect,
I'm going to ask. I'm going to ask Sonny. I know you don't know. I'm going to just ask Sonny to bring her stuff back up because Tom Lee, the infamous guru on CNBC, he basically is saying that this is a scare, not a crisis. And he's basically saying that we are going to bottom here this week. And he's basically saying that it's going to go back up. Well, I'll show you some stocks right now, and I'm sure the Sunny Bands may confirm it, that are right on major support. So let's start with Google.
I don't think Google's done yet. I sold all my Google today, in fact.
Well, what does it look like? Because it seemed like that 170 neighborhood would be an area 165, 170, an area where it could stop if
I
it
think
wants to.
149 is where it's going to stop. I think we've got some further down to
149.
go.
Oh, okay. Now, I listen. I agree with that 110%. If it breaks this neighborhood,
It will.
if it doesn't break this neighborhood, then this guy Tom Lee might have something going on because there is support in this neighborhood. But
Yeah.
but then the trap door does take you down to 140, 130 or something crazy like that, at least 150.
Yeah, I
But
think
how crazy is it? Do we think that Google's really going to start coughing up money,
Well,
vomiting
basically,
money? No.
basically, it's very low PE now, and they do have a very, very good, solid cash flow business.
Well,
So,
let me
and
add,
and you don't get to buy it on drops very often.
I
understood,
don't
but
think that
may
matters,
I just
Jim.
add
I don't
one?
think that matters. I think that it's going to go where it's going to go. Who cares what the PE is?
I
Well, like I
agree.
say, I'm saying, but there are people who care. Like I say, there is support down here at this area. So if it breaks, there's no doubt, technically, the 140, 130, 150 area is definitely in the crosshairs.
Can
Mhm.
I ask
But
can I just
when
toss a question in?
you get the negative sentiment this high, and I don't know if you know short interest, but there's short interest of over 9% in the S&P,
You betcha. I'm short.
SPY, and you got a short interest of 26% in the Russell, and over 7-8%. And yeah, this was before today's action. So
Right.
you've got already very negative sentiment, and that plus some kind of, because you got a guy in the White House, he could change his tune, and if you change your tune and everybody's short, you saw what happens on Friday.
Well, you see where my
30 minutes to take the darn thing up 200 S&P points almost.
yeah, you see
Understood.
where my lower sunny band is?
Where is
Lower
it?
outer band is down around 156, 155, right in there.
Okay,
Yeah.
It's going to go there.
so maybe they do a little flushy and then they bring it right back.
Well,
Yeah, they could do that.
may I want to toss a question out to both of you guys and or to you folks that when do we or did this person who was on CNBC or wherever station he was on, do they bother to just really review overvalued?
No, because of the fact that the flows into stocks are continuing and continuing and continuing as the demographics become more favorable and more
But
favorable and
that's
more
not
favorable.
necessarily bullish.
Right. It could go down and down and down right into that.
Because if we consider overvalue, which is something I think a retail investor has to consider, but an algorithm running gamma does not give a crap
Mhm.
and will
But
continue to buy calls, and the dealer's going to have to continue to sell it, and the dealer's going to have to continue to buy the stock or buy the underlying, whatever it is. But when do we go and talk to people and say, no, you don't want to be buying it here? Yes, it may go to 170. It might even go to 200. But when it gets there, you're not going to have a blink to get out.
Right.
You will not get out because it'll turn so fast like it did today.
I agree with that.
What happened to the people that had to buy in on Friday or bought in because they were seeing the technical indicator saying, look at the volume spike? So it's not just it's price action, but it's volume pushing this up. And then to realize that, well, what really was is they were buying volumes and volumes of calls, and those dealers had to turn around and buy the underlying. And then today it got reversed. And you think those dealers were the first ones? No, they sold their hedge and bought the call back way later.
Yeah.
yeah.
So again, the dealers are making a friggin' fortune through all of this. Retail is getting their butt handed to them.
All right, let's take a look at another one. Nvidia. Is this a neighborhood where it holds, or it's definitely going down towards 100?
I sold all my NVIDIA. I think it's going to go down to the lower outer band, which is at 98.83.
Right around
Yeah.
100. Yeah.
And I mean, it makes sense because where was it most comfortable? It
Right
gained
down here.
fame above 100. And I
Right
don't think
down here.
NVIDIA is not a good company because they're solid in what they produce, and there's a market for it. But they're going to get their butt handed to them because of what is happening in Washington on these tariffs.
And yet we've got the new Blackwell chip out with NVIDIA, and that's going to get some more upward movement, but I think it's going to go down to 102 before it does that.
All right. What about Apple? I see a lot of support at 235, 230.
Yeah, I do too.
I see the support at 207, Jim.
Well, no, that's if it breaks. But what about it doesn't break? Is there anything around 230 to 235 that you think looks like some support?
Well, the DMA is dynamic moving average is right at 235.
There you go.
So that
But
could
we have
hold.
to consider how long will that hold?
Yeah, that I say that could hold.
I
I
thought
don't think it will.
NVIDIA should have held at 116, and then I watched it go to 114 on Friday, zip back to 124, and then today fall to almost 112.
Hmm.
So when the push comes in, they recover, but what happens when it goes, but it doesn't stop?
Well, that's going to happen if it breaks 230 and 220, but that's not going to happen if it can
Oh,
hold those levels. And then, of course, the news can change. And
right.
how,
My next question would be, who's going to hold it there?
Who's going to hold it there? People who look at it and go, you know what, this is this is a company that obviously has a lot of customers, and if they can come up with finally a decent product that people are really interested in, they have a captive audience to sell something to. They just haven't come up with anything very intriguing.
I
But they
think right
still
here's
sell a
where it's
bucket load of
going.
stuff.
It's going to 203.
Yeah. Well, like I say, if
That's
it
a
does
harsh drop.
if it
But
does
that's
that,
just a nice
that would
healthy
be
correction.
a hell of a place to get to, because
Yeah, and then buy with both hands down.
yeah.
Well, I would encourage people to go back if they can go back that far in their memory and think about different situation, but the market was selling off with a vengeance in August of 2024. We can go back even further. We can go back to 2008, 2009. Different situation for sure on what was happening. Also, COVID, different situation. But when the sellers walked in and they could care less. You got in the way, you got stomped, and they left you bleeding at the side of the road. And what I kept thinking when all of that was happening, it's like Apple is not a bad company, Google's not a bad company. Google and Apple combined probably are the ones responsible for California being the fifth largest economy in the world.
Mm-hmm.
And I don't think that's going to change because Apple has a humongous cash reserve. So they'll survive. Whether their stock survives at current levels or even 235 or 230, the company is going to survive at 190. The company will still survive. But it's going to be, what is the market action? What is the market willing to do? And regardless of somebody saying, well, I think it's worth this amount. Okay, great. Step in and buy it and tell your customers or your clients, yeah, you're in it for the long haul. That's, I think, the big problem. I don't disagree with what you're saying, Jim. I think it is.
No, and this guy is talking. He's not talking day trading, and he's not talking precision. He's just basically giving their broad strokes. So he believes,
but the charts tell it all. The charts tell the whole story.
Well, put up Amazon, and is there no support here at 220, 210 to 195? There's
I'm
no
sure
support.
there is, but I think it's short-lived.
Well, like I say, short-lived. We'll see. Short-lived.
I think
I know, right? Yeah, you're right.
I guess I'm cautioning people about jumping on the sell side after we've come down 300 points on the S&P, after Amazon's gone from 245 to 210 and getting really, really bearish right down here after it's already dropped $50. It might not be that might not be the entry point for bearish people. You know what I mean?
We've got support at 199 on Apple.
Right? No, on Amazon, you mean?
Sorry,
Amazon. Yeah.
199.
Yeah. Jim, you make a very, very solid argument in terms of like, do you really want to get short here?
Right.
I might do it with some spread or something like that.
Yeah.
I see what you're saying. It's like if you're going to initiate a short, have a plan. Have an entry.
I mean, Larry Summers said it very well. He says the biggest problem investors have is they do today what they were supposed to do yesterday.
Amen. That's actually very true.
That is so true.
And so
So
that's why you got to
I
be
agree
careful.
with you on that. I
Um,
do urge caution, but I don't want to step in front of. Well, you're right though, Jim, because when you mentioned it's like it looked like we were in a freight train on Friday morning, and then all of a sudden stop, and then it was like get out of the way because the freight train's going north.
yeah.
And then
That
today,
short interest is very, very heavy. And so if there's any reason to cover your shorts, as we saw Friday, could be the end of the month and all that kind of stuff. Let's turn our attention to, while we still have some time, to the something that's very inexpensive, and it's because really the energy markets. But let's
Hmm.
take a look at just Occidental, Schlumberger, and Halliburton, just three of them, to see if there's
Give me
anything going
some.
on.
Give
Yeah.
me
Oh,
some.
HAL is Halliburton to start out there.
ooh,
And that's just a
it's been
steady, slow
pummeled.
move down.
Yeah.
We've got an
And,
attractor at right where we are right now. That might hold. That might hold.
and what
Jim, they,
about Schlumberger, SLB? SLB.
It's done the
mm,
same thing. Slow move down. And we're going just down a little further to 36 something, 67. So
Yeah.
we've
So
got the
the
little
energy
tiny dip.
shares are just in a definite downtrend, but they are near the lower end of the bands. And the only thing that would probably save them is if something happened to crude to take it out of this 60 number and pull it back into the 70s.
I think what you need to do on these stocks like this is they're all just finishing the upswing off of the pandemic lows. And so how far would that correction come? You can just use straight fibs
Hmm.
and you can just be, real clean. And let me just, because I'm looking at Schlumberger, and if I go from come on, if I go from
You
the
want to show
pandemic
yours
low,
now?
sure.
There you go.
Let me go back over there and say, go to here, go to here, go share. And now we're back on. And so Schlumberger, that's the pandemic low. It's done nothing but just cruise right on up like everything else, and it completed the rally. Now we got an A, B, and we're coming down in a C wave. But what were you saying, 30? I think 30 is probably a wise choice because you can work a trade and go like, well, if you're going to get in at 31, you're running the risk that it can continue to 20 to 23. Now, what would be the percentage chance that it could drop all the way back to 12? I think that would be pretty low
Right.
because Schlumberger is working on all cylinders. It is still doing what Schlumberger does. And so unless oil stops, unless we stop all, carbon emissions, but I would think that it's just going to correct, but it has a chance at 31.
Hmm. Yeah,
And
had a
then
chance
that
to.
finishes the pullback, and then we're up. We would be in alignment to do another 5 waves up off that level, maybe a little lower. But I would think that most of the time, pull about 62%. Below 62%, you actually don't want it because
Yeah.
then something really else is going on, right?
Hmm.
So you're going to look and you go like, "Man, I want to get out." The other one that was actually pretty much the same thing, and I think a lot of it right here, Jim, and what you're talking about. Here we have, there's the pandemic low. I definitely don't think Halliburton goes back to 425. Absolutely not.
But
They could,
energy looks bad right now because of that expansion. Now, what about Newmont Mining Gold? I mean, that thing had a rally from $30 up to $60. It's come back to $40. Is the next move going to take out 60 and put it back where it was a couple of years ago?
I think so. I actually do because you see it's 3 waves down, and now it's working on 5, and this is like the 1, and that's a 2, and now we're starting to get ready to launch again. I'm on a monthly chart on this puppy.
Yeah, me too. What about is that a 60% pullback? The 30 to 60 and back to 40? Is that about a 60% pullback?
Well, this one would have been,
30 to 60. I'm looking for
yeah,
the
yeah, actually, yes. It'd be 31 and then 618 is 29. So yeah, 30. Yeah, it's about a 62% retracement.
Yeah. So that combined with all my moving averages having a party at around 40, it seems to me if you started to see this
They are
thing
having a
print
party.
40, if this thing you ever see it 50, it might be telling you that it's going to start going again.
Yes. See what it did. This is Friday. Oh no, this was last month. So it started it, but then they pulled it back. And I think that for Newmont, when we're talking about, gold producers, right? Gold miners, and I know Newmont, you know this better than me, Jim, on the percentage of what they do in gold and what they do in copper and what they do in other metals, but I think they do a majority in gold. And I think
And
they're
they merged with some company in Australia to make them like the biggest one in the world.
okay. So their production cost, in other words, what it costs them to get the gold out of the ground and refine it, they're ready to give to the producers. Um, I think is probably one of the lower ones. I mean, you're looking at like Newmont, you're looking at Barrick, you're looking at like Pan American Silver. They've been around long enough that their mines have been in production long enough that their per ounce cost is low. So when gold starts to really pop or silver starts to be, did you see silver today, by the way, Jim? When they start
What
popping
did silver
again,
do today? I didn't notice.
well, it's showing down
Yeah, oh
13
yeah, yeah.
cents right now, but it was up 54 cents this morning. It's just a little pullback off of that big move it made. Um, so, and it gets more silly when people come in to sell it because nobody wants to buy it. But I do think it's like, if we consider what their cost is, I think that the miners have a very good chance. The bigger ones have a very good chance of following gold up. And my own personal, like we talked before, and I agree with Sonny, I think our next stop, I agree that gold, I think, has completed its smaller pullback. It got down to support on the nose, and then it launched today.
Yeah.
So I'm like, okay, let's hope that's just wave. That's just the beginning. It comes back a little bit and makes another launch and another launch. The other thing to remember about gold, it expands massively in a fifth wave versus like equities do it in a third wave. For some reason, gold does it in a fifth.
Which
You
And
know,
you
a
know,
silver, a sil. Hmm?
what are they gonna find when they go in and look at Fort Knox? Is there enough gold in there to cover what we think we have?
Steve Mnuchin said when he checked there was. No, he was
I
on TV. He goes, "They're going out there. I went out there. The gold is there." But
well,
I think they're doing it for everything is done for social media or whatever the hell it is.
Oh
yeah,
yeah.
I mean, I think there could be a problem because we have GLD and we've got other things, but um, can those open contracts can they be covered if they all show up at the window at the same time going like, we'd like our gold, please? There could be a problem. There could be a problem because the United States itself is not going to sell its gold.
Well, the problem would be is why are they there? That would be the bigger problem. In other words, if they all showed up looking for their gold, it would probably mean that a few other things, the wheels had fallen off the bus, right? Like the dollar, the stock market, the real estate.
I'm going to say, Jim, that it's the wheels, the
Right,
transmission,
the whole thing. Yeah.
everything. Yeah, I would agree with you on all of that, and that part, I don't see. I actually see gold. I think this particular move will get it above 3,000, but I think before this particular leg of the move is done, I think we get up towards 3,300.
I would agree with that.
Oh, there's two stocks I want to talk about because they definitely were put on sale recently. One is MicroStrategy MSTR. Is it almost time to take a bite out of that? Because it's gone from, if you're a believer in Bitcoin, obviously, if you're a believer in Bitcoin, this is the one to keep an eye on. And it went from $500 all the way down to 250 here. And it seems to me 200 to 250 is the buy zone. What do you think?
I
I
would agree. Yeah.
Yeah, I think here, and that's actually a lot lower. I just think it's so explosive. That's my monthly again. Let me bring this down. Let's
That's
look
why
at
if you want to play ball in that arena, you want to go with the Cadillac or the Ferrari, not some slug like Riot or Mara. You know,
Agree. I agree.
I mean, if you're going to get into it, if you're going to get into a dice game, you're going to try to make some money.
and
And
at
so
least
this is the Ferrari. If you're right,
right. And the guy who is behind MicroStrategy actually owns how many billions?
he
And
owns a lot of coins,
he owns a lot of coins. I don't know
and
if
he's never going to sell.
I don't know if yeah, that's what he says. I don't know if he's a miner or
No, he just buys the coins. What he does is he issues debt in the form of zero coupon bonds and preferred stock, and then he takes the money that he raises and he buys Bitcoin with it. So it's
right.
it's a fully leveraged play on Bitcoin. Bitcoin goes to 150, 200,000. This stock could go to a grand. You know what I mean?
Yeah. See, and this is what it did today. Here we had the gorgeous rally in Bitcoin this morning, and then it gave it all back.
Oh yeah.
And so this thing will drop. This drops almost point per point with what the coin does. But I think right now you're getting 5 down, 3 up, 5 down, 3 up, 5 down. So I don't know if it's over yet. So I'm going to be more cautious.
Yeah.
And you can. I think it's like what you would think. You start dabbling in it. And
What do you call it? What time frame are you on? 1 year?
no, I'm on a daily. But yeah,
Oh, okay. No, I'm looking at somebody buying it and maybe going out a while. You know what I mean? Yeah, I'm not looking
yeah.
for this as a trade. You know, when you do the Bitcoin stuff, you know, you almost have to commit for a while if you're going to try to, be in there for the big boom, boom, boom.
Even on my 5 year weekly, I mean, it's not. It doesn't look bad. And right, the 5 year weekly, it came down on Friday,
Yeah.
or actually last week,
Yep.
and got almost touched the 50 period
Right.
moving average,
Right.
and it
That's what
held,
I saw. Yeah.
and it popped. Let's see if it continues to hold. If
Yeah.
it
But
continues
this
to
is the
hold,
place
maybe
you'd
it'll
monitor
double.
it. Yeah. This
It
is the
could
place
double
that's on
bottom.
sale. Yeah. This is the place that's on sale.
It'll double bottom and
Yeah.
it'll perk.
These
I
big these
I
big bull markets, you can't buy them on strength all the time because then you'll get caught into the reversion to the mean. Basically, what I'm saying is this thing had a reversion to the mean now, and this is the time to sniff around to see if you think it might have value.
well, you're thinking the mean is there, but actually, could the mean be here? It
Well,
seems
no,
that
I say, my mean on the thing could be somewhere in this 200 to 250 area. Let me just go a little bit on one thing here. Let me see what else I see here. Give me 1 second.
okay.
I'll jump over to the longer term graphs because they might give me a better number. Oh yeah, I got it hitting some stuff right at 250. That's why I mentioned it. This 250 number, could and yeah, like I say, I got some highs at 200. So my feeling is 200 to 250 is what they call the county of value.
Oh, got
If
it.
it starts breaking well under 200, it's in the who knows where.
Well, I think it just can go down to 115.
Yeah, exactly. That's what I'm trying to. Well, that's pretty who knows where. I don't want to ride something from 250 to 115. I don't have that much extra money.
Yeah, I hear you. I do hear you on that.
Let's
Yeah,
jump on Tesla real quick and then we'll close it up.
Tesla.
Tesla had a nice big correction down to where it could be in the support zone as
Oh
well,
my God, I
maybe.
got too many lines on this sucker. Hold on, let me get rid of some
Because
of them.
again, you got to buy Tesla when it's had the reversion to the mean. If you're going to buy it after a run up, you're just going to provide liquidity for smart people.
Tesla
Where?
is a tradable stock. It's not an investable stock.
Yeah.
And I think we're just about done with that move down. I think we're going to go back up again.
Yeah. I see 250 to 300 as the neighborhood there.
Okay.
That reasonable?
It is. I think you can go down to 230.
I say 200 to 200 to 250.
Oh, did you? Then yeah.
Oh no, I misspoke. Yeah. Well, like I say, it could go to, you're right. You're right. I would say more like 230 to 280 where it is now. $50 move, a $50
The problem with
range.
Tesla is that when they come in, and again, it's not that they're selling Tesla, they're selling as a basket of all the Nasdaq. They're just pounding the Nasdaq. Or I don't know which other indices that this stock is in. But when they did, it's in the S&P. So
Oh, it's in everything.
it's not in the Dow.
No, I'm talking about everything like the ones that people trade. The Nasdaq. All right, let's get into who we are and how are you going to help these guys. Sonny, mention what you're doing at Money Mentor and how they can contact you, please.
I'm at moneymentor.com. I'm a PhD mathematician, and I am a 44-year trader. I have a daily live trading room that I do, and on 2 days a month, I do a full day trading room where I trade for 6.5 hours live with you watching me. So please join me. My number is 760-908-3070. That's my cell phone. Give me a call.
Sounds great, Sonny. And Michael, again, how do people get a hold of you and what are you up to?
I'm up to a lot, but I have to say, Sonny, you've caught the old trade room bug, um, which is great. I love it. Um, Well, I am still doing a couple of things. I have memberships now on YouTube, and I have a bronze, gold, a bronze, silver, and a gold. And depending on what level you want, depends on how much information you're going to get. My basic is the bronze, and you will get a daily update in the Nasdaq and the S&P 500. As you move up, you get a little bit more things, and I include in my daily, and I also do morning updates on a silver and gold level, and I include a lot of the spot gamma information. So a lot of where gamma levels are sitting. And the other thing that I want to talk about is that I turned into be a day trader. So I'm a day trader now. And boy, I got to tell you, today was absolutely perfectly glorious. If you didn't get all wrapped up in, oh my God, the market's sinking. Oh my God, what's going on? And you just paid attention to levels and you knew what to do, it was a money machine. Now, if people really want to put aside the who, what, where, when, and why and trade technical and trade according to indicators, then there's a lot of money to be made right now. And what I am offering is a day trader course, and it's 10 hours of one-on-one, um, where we go over mindset, we go over indicators, we help you put the indicators together on your computer so that they're accessible and usable, and then teach you how to do them. And then I teach some Elliott, and I teach about how to use that. I teach about spot gamma levels. I teach about all that good stuff. And then we don't just set you free. We would give you then also some time within our Discord server where you'll be able to read all the alerts and you'll be able to keep up on things. But that's available. If you have an interest, you can check me out on logicalsignals.com. And you can then go to teaching coaching and you'll find all the information there.
Sounds great, man. As far as Option Professor is concerned, if you're trading options, I can help you. And how do I help you? If you're just starting out or you need a refresher, we have an options course that's included. Then, of course, every Sunday night, I send out option ideas, which could be strangles, which could be outright calls, whatever. And then, of course, it comes with coaching. Just like these guys are talking about, you can call me directly and you can show me what you're doing. I can show you how I would do it, maybe differently, maybe better. And then, of course, I will show you, again, all the different strategies, when it would make sense to do them, when it wouldn't, how to get in, how to monitor it, and how to adjust it. So obviously that's not easy to do, but after decades of doing it, I know how it works. So again, it's optionprofessor@gmail.com, optionprofessor@gmail.com. You shoot me an email, you let me know when you're available, and I'll chat with you and see how I can help you. David, thank you, Sonny. Thank you, Michael.
You're
And
welcome.
we all got to go get dinner now out here, and the other people have got to go to bed.
There you go.
All right. Sounds good. Yeah. All right. Great discussion as always. So just a quick reminder for everyone, please be sure to subscribe to Timing Research on YouTube and Substack and your favorite podcast app. Also, if you just go to TimingResearch.com, you can get the recording of this one as soon as I get it posted. Also, any of the past shows and presentations and events, the archives are there as well. And just want to thank my guests again for today. Michael Filighera of LogicalSignals.com, Sonny Harris of MoneyMentor.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.
Thank you, David.
Time is 5 o'clock